Good evening. Today is September 8th, 2019, approximately, let's just say 5:45 Eastern Standard Time. My name is Olawale Okabola, Spartacus Trading Corporation, where serious advanced traders come to train and learn, and I'm your e-mini specialist, here to bring you the prep report for tomorrow's pit session trade and set the tone for the week. Tomorrow being September 9th. So let's jump right into it. We're going to start off with the monthly as we always do. The monthly chart. Quickly, we are one time framing down 2 months. 1, 2. We're in a 2 month balance area and we are trading, I don't know, 60, 70 points above the 2 month half back. What does that mean to me? It just means that we are above the halfway mark of this balance area to get some kind of idea of what's going on a time frame longer than the day time frame. The 2 month half back happens to be uh, August. August closed, August settled. Okay. Nope, I take that back. Sorry. Looking at my notes. September's open. I knew it was one of the two. Apologize. September's open happens to be the half back. Okay, so we are trading above. When we opened the month of September, I guess that was last week, we were below the half back, meaning we were in the half. We were below the halfway mark of the 2 month balance area. But now, as you can see, I mean, I don't need to tell you this. You can see for yourself, we're trading clearly above the 2 month half back. On to the weekly. All right, we're one time framing. 1, 2, 3, 4. It's safe to say 5 weeks we're one time framing higher because we're going to open either above or below this settle from last week. In order to stop one time framing, you have to take out the weekly low. I seriously doubt, unless the world's coming to an end, we're going to open up taking out last week's low. So it's safe to say, at least going into tomorrow, that we are one time framing higher 5 weeks. 1, 2, 3, 4, and an imaginary week, which starts tomorrow, 5. Okay. We're also in a 6 week. I will dare to say 7 week because we're dealing with a week to come, right? Balance area. 1, 2, 3, 4, 5, 6. And when this week opens, 7 month balance area. What you want to know is that we're trading above the 7 week half back. So I'm looking at the weeks, I'm looking at it for going forward. Instead of saying 6, I'm saying 7. So I'm looking at it going forward. So we are above the 7 week half back, meaning, once again, just very simple, we're above the halfway mark of this 7 week balance area. Want to pay attention to that because I trade options. I definitely want to know what's going on with the time frame higher than the day time frame. All right, let's go to the daily. This is where it gets interesting. We're in a we're one time framing. Let me start right there. We're one time framing higher. 1, 2, 3, 4 days. We're one time framing higher. I will not dare to say 5 days, and I'll share why with you later. So it's safe to say we're one time framing up 4 days. We're in a 2 day balance area. Not only that, that's kind of ugly. Not only that, but we are in a what we call an inside day, right? I talked about the inside day concept on one report from last week. I can't remember. Well, here we go. Here, look here. This is the third. Okay, so if you want any idea of how to go about playing the inside day, just refer to my report, my recap report from September 3rd going into the 4th. Okay, going into September 4th. So I'm not going to go through that whole concept of the playing an inside day. You guys should be able to review that, and it should get you up to speed very, very quickly on how to play the inside day and the whole concept behind the inside day. All right, so we got an inside day going into tomorrow or this evening trade. Actually, one thing I will say about the inside day trades, going with the breakout, a lot of the time the move happens in the overnight. So if you are a spy trader where you only can basically trade that instrument when the New York pit opens or if you're just your typical day trader who doesn't trade the overnight, a lot of the times you're going to miss the breakout from the inside day. Um, it doesn't always break out, but I would say more than 50% of the time, the move happens in the overnight. So what you wake up to is usually a gap or a gap and fail, meaning we return back into balance. But by then, those who understand the inside day have already taken their profit if they're savvy enough and not greedy. Okay, let's go to the profiles. But before we go to the profiles, I'm back on the weekly chart. I'm looking at my notes. One thing I do want to bring up with these higher lows on the weekly, how many times, just ask yourself, how many times were you shorting this market last week if you didn't have a good week last week? How many times were you short in the market? And then I'll go and ask you, have you been looking at a time frame longer than the day time frame? If you had and you see these higher lows on a time frame higher than the day time frame, you want to ask yourself, why am I fighting the trend? All trends are up. The monthly is, well, I take that back. All trends are not up. The monthly is balancing, but we're above the halfway mark of this 2 month balance area. Take it for what it's worth. The weekly trend is up, definitely up. Okay, up, up, up. And then the daily trend, we just talked about it. The daily trend is up as well. So going back to the weekly, you were shorting a lot. You find yourself getting stopped out a lot last week. You might want to start considering looking at a time frame higher than the day time frame to understand what's going on with the folks that can really move the market. Okay, now to the profiles. Here is the 2 day balance area. This is Friday's trade. We got a squat profile. Not much to talk about. 12 wide. We got an inside day. I'm just going to give you some scenarios for playing this inside day. You want to go with the breakout. Usually, when you get to the opposite extreme, all bets are off from the inside day. But in a situation like this, at least to this upside, I mean, if you take this breakout from Friday's high, all bets are off here. So you want to ask yourself, is the risk worth the reward? Well, is the reward, I'm backwards today, if is the reward worth the risk? Okay? On the downside, there's probably a lot more juice, but doesn't mean we're going to go down. But if you do take the breakout from the down, from the low of Friday, you got some more action. There's some more juice to the trade. If that's in fact the direction the market wants to trade, you have the single prints from Thursday, light volume, as you can see. The volume is, relatively light. And then what do we got? We got a gap. So there could be more action to this trade. And here's a gap fill right here. Okay, you got the gap entry, you got the gap fill. I'm not saying that on a breakout from the inside day, we already know all bets are off once we hit this extreme. However, you can stretch that a little bit because of the gap, but I'm not going to go as far as to say that we're going to fill the gap in one day. I don't know. You just have to monitor the trade. It's difficult to monitor in the overnight because you don't have a lot of volume. So sometimes you just got to give it your best go and manage the trade as best as you can. So that's what's going on with the downside. One caveat to going with the breakout. If you end the trade and you decide to hold it, what you don't want to see come tomorrow pit session, you don't want to see the market come back in and out of this range or from Friday because we have a very prominent point of control of 12 that hasn't been revisited. We closed below it. Say, for example, in the overnight, the market trades, gets through there. We start playing around in the pit session. We probably are going to try to revisit this 12 wide point of control. Doesn't mean we're going to get it, but that's on the table. What you want to see is a breakout. You want to see the market gap, hold the gap, trade lower, get through the gap entry, and at least make an assault on the gap fill. Okay. So what do you want to see as far as continuation if you're in this trade to the downside? Value. You want clearly lower value from Friday. You want value begin to elongate, at least try to make an attempt to overlap the gap entry. Then you know you've got a really good trade on because value is in agreement with the direction you're going. Okay, so it's all a function of where we open tomorrow and what goes on in the overnight. Okay, so I beat the downside to death. Let's go back to the upside. If you're interested in taking that breakout from the upside, there is a possibility of some more going on to the upside because the weekly and daily trends are up. We talked about it on the monthly chart that the monthly we're above the halfway mark of this current 2 month balance area, so that's something to consider. As well as, let's go, here's our marker. Okay, so that's the breakout point where all bets are off on an inside breakout. Apologize, folks. I'm off my game today for some reason. Sunday, right? Just getting ready to crank it back up for the week. Okay, so this line represents Thursday's high, right? Breaking out. So basically, I have to scroll all the way back to August 1st to find a profile where at least there it could show me what's above the market, right? What's above the breakout point from here. Start again. What's above this breakout point, right? Because we go with that. What's above here? It's clearly not just all space there, right? So I have to scroll all the way to the first to find what's going on, right? So we got this day. This was a 60-point range. I talked about it in last week's several reports from last week. It's a 60-point range, and it was on some light volume. So safe to say, if we break out, we're in and around this line. So I want to kind of just get an idea of some possible destination points, right? So first thing I'm going to look for is the anomalies. So you have an anomaly here at 88 three quarters. You have another anomaly here at 3,000. So I guess it's safe to say if you want to go for round numbers, if you can get over 88 three quarters, tagging this anomaly here, then the next spot or destination is probably the 3,000 level. It's a safe number. I'm sure everybody's paying attention to 3,000 again. So you want to monitor the trade on the breakout. You want the market to gap, hold the gap, and then when the market opens in the pit, one time frame higher. Because if we gap and hold the gap, you already have value on your side because value will be clearly higher. And so you just want the market to one time frame higher, showing some elongation, showing a trend. And you just evaluate how confident the market is making an assault on the 3,000 level. And you see how I came up with that 3,000 level. Looking through my notes, that's about all I got. So I hope this is helpful to get you on the right side of the trade going into the week. All right, everybody. Sorry for the video. Obviously, I'm kind of rusty today, but don't worry about it. I'll have it all together as I begin to find my legs as the week goes on. This is Olawale Okabola, Spartacus Trading Corporation, wishing you a good day.